Stocks take a beating, with mid-caps bearing the brunt after Trump unveiled a fresh set of tariffs, adding further uncertainty to global trade. IT and healthcare are the big drags. Telecom too sulks after the Supreme Court defers its hearing on Vodafone Idea.
In a landmark move, the Supreme Court has overturned its earlier order, paving the way for JSW Steel to retain its interest in Bhushan Power and Steel. The court observed that the purpose of IBC had been achieved and it would be disastrous to undo the deal. It also dismissed the EBITDA claims as this was not a part of the resolution.
The Telangana government has indicated its intent to take over phase 1 of the Hyderabad Metro along with its debt from L&T for an equity value of Rs 2,000 crores. Analysts see the move lifting a big overhang on the stock.
Donald Trump has announced a slew of new tariffs, with the most significant being 100% levy on patented and branded drugs not manufactured in the US. While India's generic industry will see no impact, select players with branded presence like Sun Pharma may see a dent.
Tata Motors armed JLR responds to CNBC-TV18, saying it has begun phased restart of its operations. It adds that its logistics center and financial systems are up and it can now sell and register vehicles for clients faster. JLR, however, did not share any details on the financial impact.
Very good afternoon. Welcome to Halftime Report, live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra and with me is Vinny Motiwala. Well, it is turning out to be a down day for the markets and it's only trended lower as we speak. So we have the mid-cap index, which is now down around 1% at this point in time. It is the two export-facing industries which are really taking a hit in today's trading session. So we have pharmaceuticals on one end, Sun Pharma, which is down around 3% at this point in time, and the other space is the IT stocks. So, for example, we have TechM, which is down around 2%, Infosys, TCS, which is at a fresh 52-week low as well. So that's really where the pressure points are in today's trading session. A larger structural problem is what the street is possibly looking at. Maybe it's not a one-day effect, but, a downtrend that we've seen for a couple of trading sessions. For example, we have Sun Pharma, which is down around 17% this year, and a stock such as HCL Tech, which has lost significantly around 27% this year as well. Hi, Vinny.
Hi, Ekta. Good afternoon. So, yes, clearly there is pressure coming in on pharma as well as IT. But let's pull up autos, right? Today, look at it. We'd have Tata Motors, Hero Motorcorp, Eicher Motors. That is managing to hold on to some bit of a green. So, that's something that we'll watch out for. Other than that, also keep an eye out on the real estate space. We have a few of these names buzzing on the back of that as well. Real estate and auto. These are the only two sectors that are managing to hold on to very, very mild gains as of now. So, keep an eye out on that one. Other than that, obviously, a lot of names that are moving, and even in the broader end of the market, either are from the pharma pack or there's any news flow that's come in, even for Waaree Energies. That's also a bit under pressure because of announcements that have come in overnight. So keep an eye out on this as well. But Ekta, clearly pressure is there today on the markets as well. And for 5 days of decline, I think that we're seeing coming for the Nifty as well.
Yes, absolutely. But let's get talking about one specific company and move away from all of the negative news with regards to the tariffs and the US-India relations. Let's talk about Jupiter Life Sciences, which is in focus. Dr. Ankit Thakkar, who's the ED and CEO, joins in now. And remember that there will be three key focuses of our top of our discussion. First is the outlook on cashless services by insurance companies, occupancy and average revenue per occupied growth in FY26, and the current status of their 3 greenfield hospitals. Well, Ankit, hi, welcome to the show. Good to see you in. You must be happy you don't have any operations in the US.
Yes, firmly India-centric.
Okay. Well, absolutely. But, there has been a niggle for a couple of these hospital companies, your cashless services by insurance companies. There was a little bit of back and forth where there was a stoppage of the Bajaj Allianz services and then, a restart of that. But there are fundamental problems within this space, right? When it comes to insurance companies and hospitals. For example, delayed payments, claim denials, unilateral deductions. So just give us a sense in terms of where things stand and what is the resolution process here.
So I've firmly believed for a long time, and I've said this multiple times, that in the long term, insurance and the healthcare providers are partners, right? Both the industries, the providers and the payers, the growth is linked to each other. With more and more penetration of health insurance, the demand and the affordability for quality health services becomes better, and vice versa. With more access to high quality treatments, the perceived need of an insurance in the mind of a common man goes up. So yes, in the short term, it does look like an adversarial relationship in terms of price negotiations and terms of trade as such. But over the long term, I think it is a hugely symbiotic relationship. That is how I have approached our relationships with all the payers. And for the most part, we have had good cooperation from them as well.
Hi, Ankit. Good afternoon. This is Winnie joining in the conversation as well. Ankit, that said and done, what about now the company's outlook in terms of occupancies and RPOBs? Where do you see that moving? Occupancy in Q1 was at around 60%, RPOBs at 67,300 approximately. What is it that you're keeping an eye out on now? Should we expect this to increase for the rest of the year?
Yeah, so on the occupancy front, I think Pune and Indore hospitals have scope for occupancy expansion. Pune should be in the mid 60 odd percent. I think it can go to 70 something. Indore had crossed 65 odd percent occupancy when we added about 100 beds earlier this year. And that has, with the expanded base, brought down the occupancy in percentage terms. But on an absolute level, we are seeing a good growth in occupancy as the year progresses in Indore. So on a console level, we expect some occupancy increase this year. RPOBs, I think, have two contributors. One is pricing, that we have maintained that inflation-linked price impact is all that one must expect going forward. One must not extrapolate a higher than inflation price hike. But the other contributor to RPOB is the complexity of the procedures. So Indore, I think, again, has a little bit of headroom for that. As the hospital is still maturing, I think over the next year or two, we should see a little more tertiary and quaternary level work than what we are doing now. And that should help the RPOBs a little bit.
Okay. All right. You have your 3 greenfield hospitals coming up. Just tell us, when do they come on stream? You have, your 2 hospitals, one in Dombivli, one in Mira Road, the other one in Pune. Just give us a sense in terms of when they come on stream.
Yeah, so I think they are all on track. Dombivli, we have said Q1 of next financial year. We don't expect any delays at all. We should be able to launch as per committed timelines. Pune as well, we had said that, post monsoons, we will begin with the construction. Excavation is pretty much over. So we are on track there to begin Pune in calendar year 28 sometime. And Mira Road, the land-related legal updation of records with the government, etc., are all over. And now we are at the planning and approval stage. So once we receive those, we will begin construction there.
Okay. Just getting back to your current operations, you had taken a price hike, which had aided 3 of your hospitals. Any incremental price hike that y'all are planning to take? If so, to what extent?
Yeah, so price hike for the most part, as I said, it will be inflation linked. The insurance contracts are usually for 2 years. And with so many insurance companies across all the 3 units, every few months, something or the other comes up for renewal. And when that happens, you see that inflation-linked price hike kicking in. Apart from that, I think we are good with the pricing currently.
Okay. You also, have cash on your books, your net cash of around 275 crores. You have mentioned that you all are looking at acquisitions. You want to add 1 hospital in terms of your portfolio. Any movement on that? And if you could just tell us what valuations are looking like as well, considering the kind of PE interest we've seen in the entire hospital space.
Yeah, Ekta, so Greenfield continues to remain our preferred mode of growth unless something very attractive comes up in terms of quality and valuation both. Currently, of the opportunities we are evaluating, there is nothing on the acquisition front. Most we are evaluating a few opportunities for the 7th Greenfield Hospital. But it is still on the discussion board stage and nothing really concrete that I can announce on. But as and when it fructifies, I'll be happy to talk to you about that.
Okay. All right. We're going to leave it on that note. Ankit, thanks very much for joining in and speaking with us. So that's Jupiter Live. We need to take a short break, but a reminder for our viewers, unlock a world of exclusivity, expertise and influence. Become a member of CNBC TV18 Access, our premium members-only experience on CNBC-TV18.com. The membership includes access to CNBC TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions and masterclasses, and curated lifestyle benefits. Welcome back. Well, let's get talking about the technicals. It's a tough day for the markets. A good time then to get a full focus on the markets. We have Manish Hatiramani from Deen Dayal Investments joining in now. Manish, hi. Welcome to the show. Well, it's turning out to be a tough day. We have the Nifty, which is down around 0.5%. We have the Bank Nifty, which is down around 0.7%. What would your approach be to this kind of weakness?
Good afternoon to you and to all our viewers. Ekta, last week when I was on the same show, I had mentioned this whole resistance level at higher levels, where we spoke that we needed a close above 24,450 to 25,500 to be precise. That was very crucial. We did not trigger that. That worked as a resistance. That's where we have turned from. On the way down, we have broken two major supports of 25,150 and then 24,950. That's the reason we are sitting on where we are right now. One of the closures that I would look at would be the very fine level of 24,850. Even though we are lower that level right now, I would be looking at the close. If we are not able to close above 24,850, this market can go down to 24,450 and 24,500.
And Manish, which are the stocks that you're looking at today?
Currently, since I am working with the short side, I've got two sell calls. My first sell is on HDFC Bank, which is for a target of 900, stop loss of 985. The stock recently resisted at 980 and is now threatening the support of 950. If we break this, we can go closer to 900. We are also seeing an inclining volume with a decline in price, which is supporting the drop in price. The second is on Bajaj Finserv for a target of 1950, stop loss of 2070. This stock has a resistance of about 2100 and thereafter we have broken the supports of 2000. This break has happened also on the back of larger than average volumes, which is confirming the current fall.
Okay. All right, Manish, we're going to let you go on that note. Thanks very much for joining in and taking us through all the technical calls on the market. Definitely a down day. Look at the advanced decline ratio. It's now at around 1:4, so it's just worsened as we speak. The advances at 540 stocks and around 2,240 stocks declining on the NSE. So that gives you a sense in terms of the kind of weakness we're seeing for the mid-caps as well. The mid-cap index currently down around 1.2%. But Vivek is here to take us through all of the stocks which are in fact moving around in trade today. Vivek, over to you.
Well, thank you so much for that. That told the story of the day. The advanced decline ratio clearly more declines compared to advances. Very tough to find any shade of green on the screen today, especially as far as the markets are concerned. But one particular stock that clearly stands out is Larsen & Toubro. Big overhang lifts if in case the Hyderabad metro divestment does come about. Analysts estimate both boost in ROEs as well as EPS on the back of that, higher by 4% the top Nifty gain. Tata Motors, some relief coming as far as JLR is concerned. Management indicates a partial restart of digital assets. Some relief rally seen as far as Tata Motors is concerned. Tata Investment yesterday was a significant down day, but then today the stock has continued its upward momentum, higher by 5%, one of the top NSE 500 gainers. And RITES is in focus on the back of multiple order wins that the company has announced to the exchanges. On the other hand, negatively, clearly, we can't look beyond the pharma pack, and within that, Sun Pharma, 100% tariffs on branded as well as patented drugs are given a specialty portfolio amongst the top laggards in the session today. And the entire CDMO pack, all of these stocks under significant pressure. Look at names like Loris, Pyramid, Syngene, Biocon, Divi's. All of these stocks, even biosimilars, seeing significant selling pressure. Intellect Design is the other stock on the NSE 500, the top laggard today, down by over 5%. And Idea, on the back of the delay as far as the verdict on AGR is concerned, that particular stock has sold off over 6% lower. Lastly, metal stocks have seen quite a bit of selling pressure come about after a few days of up move or sale, down by over 2.5% today.
Okay, Vivek, thank you so much for that. And the only green, I think, is all of us wearing green right now with L&T and RITES. Apart from that, everything is in the red. But thank you so much for that, Vivek. On that note, we're actually going to slip into a very short break. Don't go anywhere. We'll be back with more markets and stock-specific action after the break. Welcome back to Halftime Report on CNBC-TV18. As of now, Nifty still is trading with cuts of almost more than 100-point cuts. 0.5% decline still continues for the Nifty 50, and the top sectoral loser continues to be Nifty Pharma, down with cuts of 2%. But that's the big story of the day, right? US President Donald Trump has announced a 100% tariff on imported branded and patented pharmaceutical products. This is going to be with effect from 1st of October. Now, unless companies are building and manufacturing facilities in the US defined as having broken ground or being under construction, this is the update that's come in there. Let's go across to Ekta to bring us what's the impact that we are watching out for the pharma companies.
Trump's announcement on 100% tariffs on imported, branded and patented pharma products is targeting innovator companies, say analysts, many of whom had anticipated such a policy and announced large US investments. For example, Novartis plans to invest $23 billion over the next 5 years in the US. Eli Lilly has announced 4 new sites in 2025, and Roche has begun work on a $700 million facility in the US. For India, the immediate impact is limited since the country is a major generic supplier, accounting for around 20% of global generics and 40% of the US requirements. Generic-focused firms like Dr. Reddy's, Lupin, Cipla, Aurobindo are unlikely to be directly affected, though concerns remain about the potential future measures. However, Indian companies impacted include Sun Pharma, whose branded specialty portfolio, which includes drugs like Ilumya, Odomzo, Sequoia and Winlevi, makes up around 19% of their total sales. Specialty revenues rose 17% in FY25, largely from the US. Analysts estimate that tariffs could in fact trim 5 to 10% of their EBITDA. But Sun, however, has not disclosed US production levels. It has said its existing capacity, however, is sufficient if required. That's what they had indicated in their previous analyst call. Now, Wockhardt may also be impacted as its novel antibiotic Xenic, manufactured in Europe, is set for US FDA filing. The company, as of now, lacks any US manufacturing presence, which could leave it vulnerable. The market is also wary of potential effects on CDMO players if formulation companies, in fact, redirect capital towards US capacity, reducing offshore outsourcing. Now, implementation questions remain, however, including whether the tariffs will override the US-EU trade rules that cap pharma tariffs at 15%, and whether APIs or finished products with patented APIs will fall under the tariff net. For Indian generics, industry watchers believe that adverse steps are unlikely given the dependence of US patients on these medicines. Still, companies are hedging risks by adding onshore capacity. For example, Aurobindo's $250 million acquisition of Lannett added a cGMP facility with a large tablet capacity, while Ipca has partnered with Biosimilar Sciences in Puerto Rico for biologics. Analysts expect more acquisitions of mothballed assets as well as other assets and new capex if in case the trade tensions do persist.
Thank you so much for that, Ekta. Important updates that we have to be keeping an eye out on in the pharma pack. And in fact, today we also spoke to the management of Wockhardt Group on the US President Donald Trump's 100% tariff on branded as well as patented drugs starting 1st of October. Here's the comment coming from them.
One of the important things is all our new molecules like Zenec, which we would be going to US as our first drug. The product is entirely manufactured in Europe, and therefore it will not be covered by Indian tariffs, and it would be covered by the European tariff. And we have to actually assess the impact of that when we introduce it. But overall, we don't believe it would have a significant impact on the business proposition which we have for Zenec in USA. We would be filing to US FDA sometime next week. We would be filing Zenec next week. It is getting produced in Europe. So if it is getting produced in Europe, I do not know the tariff position. Is it even in Europe? It is 100%. But our product is getting manufactured in Europe, and we have to assess the impact of the tariff. But this will affect most of the drug because major part of a new molecule are also manufactured in Europe and other countries.
Okay, on that note, we're going to slip into a very short break. We'll come back and discuss actually with the management of Sai Life Sciences is going to be joining us up next as well. So stay tuned for that.
Welcome back. You're still tuned into Halftime Report on CNBC TV18. Well, it's definitely turning out to be a weak day for the markets. We have the mid-cap index, which is down around 1.3% at this point in time. And we do have the Bank Nifty also, which is down around 0.8%. But it is specifically about Pharma and IT. But do watch out for stocks such as Indices Bank as well, which is down around 2.8% at this point. Geo Financial is down around 1.6%. Eternal too is seeing profit booking from the Nifty space, which is down around 1.6%. So there is profit booking, which is cutting across segments and sectors at this point. L&T, however, managing to hold up with a gain of around 3% Tata Motors bouncing back in today's trading session. But let's move on. The Defence Ministry has signed a 62,370 crore contract with Hindustan Aeronautics to procure 97 Tejas Mk-1A aircrafts for the Indian Air Force. Our colleague Parikshit Luthra spoke with the CMD, who also outlined the timeline for these additional 113 GE engines. Listen into this conversation.
We have already concluded the negotiations. The financial figures are finalized. We expect in a month, now that this main contract has been signed, before end October, we will be able to sign the contract with GE for the 113 engines. The negotiations and the price has been already finalized.
What will be the timeline now, sir, for the complete delivery of the 83 that were ordered in 2021 and now the 97 which have been ordered?
Yeah, the total orders, both the orders combined is 180 aircraft. So we should be able to close this by FY 32-33.
Right. My final question to you, sir, would be, what about the AMCA program? What's the level of interest that HAL is likely to show? Of course, HAL may be one of the front runners when it comes to the AMCA program.
Yeah, we are going to participate definitely in the AMCA expression of interest. We have had interest from all the partners, private partners in the country. We had issued our own expression of interest. We had 28 companies responding to it. So everybody wants to work with us. We have set up a committee internally to evaluate these responses. And we will be shortly finalizing the tie-up that we will have. And we will be bidding before the end of this month, which is the last date. Right. And this is, of course, a screening stage where the selected companies will be given the RFQ in the next stage. So we will definitely be participating.
Welcome back. Well, the market is closely watching potential effects on CDMO players if in case global formulation companies redirect capital towards building US manufacturing capacity, which could hence possibly reduce offshore outsourcing. While this does pose a risk for Indian pharmaceutical companies, Indian CDMOs, as of now, they remain well positioned to capture opportunities due to factors such as China Plus One and the US Biosecure Act, which aims to move dependence away from China. Listen in to a slice of a conversation with the management of Sai Life Sciences, who I had the opportunity to interview from the Genome Valley. Listen in to Shiv Chatur talking about a whole host of factors which are actually driving CDMOs up right now.
We've announced a 700 crore total investment for the current financial year, of which a significant portion of this will happen within Genome Valley. We're doing multiple things within this. We are actually adding additional discovery capability. We've acquired around 10 acres of land in addition to whatever facilities that we've got. That will help us add discovery services capability. We're adding process research capability and peptide research capabilities in the current facility that we are in. That would help us get into new modalities. We're also adding additional capability within biology. We're going to be adding additional equipment and things that would kind of help us do integrated discovery services. That's really the focus for this year. That's really what we are building.
Okay. Well, you are a CDMO company. So give us a sense in terms of the kind of opportunity you might be seeing. All of your peers are talking about incremental RFPs, a lot of inquiries coming through because of factors such as China Plus One as well as the US Biosecure Act, which could be in the pipeline again. What is your experience with?
I think the last 12 months has been a significant uptrend with respect to what we are seeing in the entire industry from an India perspective, primarily driven by diversification theme. I think India for a long time has not had due share with respect to the new chemical entity business, and that is changing. What we are seeing today is customers coming and talking about a lot more strategic portions of outsourcing, people trying to pick up their partners that they would want to work with for the next few years. China has had an early mover advantage in terms of having scaled up faster, but today what the global pharma companies and innovators are looking at to actually how do you rebalance this portfolio, which is kind of skewed one way. That is going to drive growth, not just for us, but I think for the entire industry for the next few years. That's really what we are all excited about.
Okay, but how much of this opportunity could probably be, limited because of the scale of the CDMOs?
I think industry will give you time. Pharma doesn't do a one-shot move into anything very specific. There are a few factors that become very important. I think one is capability and talent, that you need to actually have the right set of talent, something that we've always built. We also believe research and development will play a significant part of how you would scale up later. A forte of Sai, that's something that we've built over the period. If these two are aligned, and if your infrastructure is aligned with the Western standards, I do believe that the growth is a continuous process. Pharma by nature is a little conservative. They will start slower. They would give you enough time for you to grow. And as long as there is no stoppage in terms of investments from right companies, outsourcing will continue to grow.
So how much have your RFPs increased in the past 1 year?
We generally don't track it by RFPs because we believe conversations are much more important.
So how much have conversations increased?
We've seen significant strategic conversations, both in terms of dedicated development centers or dedicated development partnerships that we've signed. This year we've seen customers coming back to us talking about very specific initiatives where they can start working with us on a longer term. Something on the development side that we haven't seen before, and I think that's a big trend in terms of how longer term outsourcing and manufacturing will go.
So when does this translate into numbers, and how much of it rather translates into numbers?
For larger numbers, it would take probably a couple of years, but I think you will already start seeing changes in terms of numbers, margin, and growth profile. Touchwood numbers have been good for the last 3 quarters. We've managed to meet numbers or beat numbers for all the 3 quarters that we provided, and we think that the trend is continuing as an industry.
So you did 300 crores in your CDMO business. There was a huge rise or increase in your CDMO revenues. Is that a sustainable run rate now? 300 crores becomes a base?
Within the CDMO industry, quarterly numbers are always very difficult to predict because we don't control the end product. Our end manufacturing or CDMO scale-up starts based on a customer PO. Our longer term trend is to a 10 to 15% growth rate. That's really what we have presented.
In the CDMO business?
On the CDMO business. And I think that's something that we continue to
Are
guide.
your numbers showing the impact of China Plus One already?
Yes, definitely. I think there are multiple pieces that we can see. I think when we listed, we talked about specific tech transfer projects where customers have reached out to us for a non-Chinese source for commercial projects. We've done more than 12 projects over the last 2 years. Some of them already become commercial. Some of them are in the stages of becoming a commercial supply for Sai. This is very important because the customer is looking for a non-Chinese source. It's a product that's already commercial. Now somebody needs to work on it to make sure that it still meets the regulatory guidelines and you can kind of scale it up.
Welcome back to Halftime Report on CNBC-TV18. As of now, the Nifty is where we started the show with, right? 100 points downtick continues for the Nifty 50, 24,780 levels is what the Nifty continues to be at. And obviously, the broader end of the market seeing clear pressure as well. We have an update that's coming from Vari Energies as well in terms of a clarification, because in the morning there was some news flow that came in that Vari Energies is being probed by the US in terms of some duty evasion on solar imports, and the company is saying that they have cooperated with US investigations in the past and will do that even in this ongoing investigation. US market is a very important one for them, and they will continue to abide by the local laws as well as continue to increase their footprint in the US is what they want to focus on. Let's also pull up RITES today, because that's the one that we'll be keeping an eye out on. They have an order win that's coming for the company, around an $18 million international order. This is from South Africa, an important one there because they're furthermore expanding their presence in South Africa. This is to deliver locomotives, and that will be completed within the next 6 to 8 months, this delivery. Furthermore, this will strengthen RITES' export portfolio as well as its presence in the Africa market, which they've been focusing on as well. So that is something that we'll be keeping an eye on. RITES is managing to hold on to gains of 2% in today's trading session. In the last hour, we have seen some bit of a gain coming in for Poly Medicure, recovered from the day's lowest point. Keep an eye out on that. Abbott India, that's another one that's recovered from the day's lowest point as well. So these are some of the names that have seen a recovery coming in, especially in the last few minutes. You know, they're in the red, but yes, they're seeing a recovery coming in these stocks. But with that, we'll wind down this edition of Halftime Report. A quick programming note as, we wind down this edition. If you are looking for the big bets and market themes that will shape India 2030, Nilesh Shah of Kotak AMC joins us live in an exclusive CNBC TV18 Access webinar this Saturday. Over 200 investors have signed up. Become a member today on the CNBC TV18 app or log on to cnbc.tv18.com access plans.